children. Where are the other words? Make a better place, or let's start giving. There are people hungry in other parts of the country. Make a better place for you and for me. Take it, Lee.
We are the world.
All right. All of a sudden you're quiet. Why are you checking me? Why are you checking me, bro? You gotta check your own boxes.
Check your own boxes.
Yeah. All right, guys. You know why we're here? We're here to. Good afternoon, Estrella. Or I can't read it yet. We don't have our biggest screen up, but we'll get it in a second. So thank you all for the love already out the gate. I'm looking at those hearts fly in. You're here to answer. We are here to answer your questions about buying houses, interest rates, programs, credit scores, down payments, LTVs, DTIs, and all that stuff. So load up that chat box, guys. We want to get a very fiery conversation about real estate going on. So fill up that chat box. I know they say there's no such thing as dumb questions, but there are dumb questions, and I want to read those too. I want to answer all of them, and I want to give you guys some input and put you down the right path to buying a house.
Sometimes the dumb questions are the best ones.
I like some of them.
Where does the white go when snow melts?
So when a teacher says there's no such thing as dumb questions, I think they do that on purpose so they can
challenge accepted. Let's see what you got.
I want to feel like I'm powerful. So load up the chat box, guys. We want to get this party started. What's a party song? What's a good party song?
I'm coming up.
You know what you can't sing? I woke up this morning feeling like P. Diddy because P. Diddy came out on a video beating the crap out of his lady.
No way.
I kid you not, man. You know who
like a real video?
Yeah, you know who put it out the best?
Who?
50 Cent. I love me some 50 Cent. That guy is trolling everyone, and he's coming at people.
He actually got the video?
Yeah. Well, CNN put it. Well, a couple of news outlets put it out, but they covered up the abuse.
Mm-hmm.
See, if you go to 50 Cent's Instagram, he's showing it all.
Really?
50's the man.
50.
Hey, 50, reach out. I haven't talked to you in a long time, so let's catch up.
Call me before you call him. I'll let you know if he's in a mood again.
He catches feelings. Like, 50 called you first? Whatever, man.
How dare you? How dare you?
Whatever.
How dare you? Oh, my God. Look at that count.
I know.
What the heck is going on here?
I'm loving the love.
All right. Let's keep it going. So, we got questions. We got answers. We got a lot of answers. So, what's going on? Australia said what's good. Good afternoon. We say, good afternoon, Australia. Rue Almighty says, How soon can I refinance to get a better interest rate? Rue. Don't be in a hurry.
Well,
I know that sucks.
What?
But don't be in a hurry. What? Because if you really do it correctly, it's probably about 3 years if you do it correctly. It depends on what your rate is, but if you're trying to do it correctly, about 3 years. It will go down. It has gone down. So here's the thing. The 10-year yield moves up and down, up and down, up and down. And then there's a basis point spread between the mortgage interest rates. And that's usually 100 basis points, but it goes as much as 250 basis points. Holy smokes. Right now we're at the 250, but recently we've been coming down. Without the Fed reducing rates, the mortgage interest rates can go up 1% or down 1%, even as much as 2%, just shy of 2%. And this has been proven in the last 6 months, because there was a time when we were quoting 6.625, and there was a time we were quoting 8.25. Both of those happened within the last 6 months, and the Fed hasn't moved the prime rate yet. However, CPI came in pretty good. Some of the numbers are coming in pretty good, which means the Fed is indicating that they're not going to increase. They've actually said it. We're not going to increase. We'll just hold for longer. Now, if they hold for longer, that gives us certainty in the market. If we have certainty in the market, then rates start to come down to a comfortable level. The minute there's uncertainty, that uncertainty spread spikes, and we're back at 8%. That happened for a little while, and then we've been kind of drifting. We're in the 7s now. But for a while there, it was looking pretty ugly. Looking better now, Rue. Looking better now. But if you really do it correctly, you're going to wait 2 to 3 years.
GP, 1414. That was not very creative, but I read it anyway. So what's the fastest way to build credit? So building credit and fixing credit is two different things. You're talking about two different things, okay? So I'm actually putting that second piece out because most people that hop on here say, hey, my credit sucks. How do I get my scores up because I had some mistakes in the past? So building credit, here's what you're going to want to do. You're going to want to get as many credit cards as you can. Literally, as many credit cards as you can. I'm not saying use credit cards. I'm not saying that's how you manage a life. I'm saying get as much available credit. So you get a credit card and they say, hey, your limit's $300. I would use it to put gas every now and again and pay it off. I would use it to buy groceries every now and again and pay it off. But get as many as those as you can, because a large chunk of your credit is how much available credit you have. We can't control credit history necessarily, because if you're getting a credit card today, how are you going to put 3 to 10 years on it?
We can hack it. We can hack it. We know the
not
hack.
Necessarily
we have
today.
that. We know the hack. We're going to share with you the hack.
I said not necessarily today, Lee. Calm down. Calm down.
Calming down.
But
I'm calming down.
make your payments on time. You
And
have to
now
make
we're
those
calm.
payments on time, okay? Now, that's how you establish good credit. And then get a car, pay it off. Get a little loan, pay it off. That's how you do it over time, okay? But what he's talking about is, how do I spike my credit right now because I want to buy a house very, very, very,
Dude,
very soon?
We got so many people watching on YouTube. It's insane.
That's
We've got,
the most
that's like
we've ever
yeah,
had
that's like
in
a
the history
that's like
of
a
Chris and Lee.
300% increase right now. It's amazing.
When you talk about the history of Chris and Lee, we're talking
Dude.
about how long he's been around.
That's
the
a long-
history of Chris and Lee.
Damn.
At least one half of it.
Damn.
So give them the hack, man. Let's say someone
cool.
has crap credit. They're almost there, but they need a little spike to get them over the top. What do they do?
You need 10 years of history. So all you got to do is have 10 years of history. Whoa, how are you going to get 10 years of history? How are you going to get 10 years of history? Here's what you do.
Live 10 years?
You could. That's one way. And pay your bills on time, which is the most hardest. That's the hardest part, because everybody doesn't pay their bills on time over the 10-year period.
Don't
But
forget.
anyway, you go to mom and dad and you say, hey, mom, dad, remember me? I'm your loving son. You love me very much. I know you have an 800 FICO score. Yeah, I would like to get my FICO score up. And I would like mom and dad to come in and bail me out a little bit. Can be your cousin, can be your uncle, can be somebody, but they have to have a good credit score. And you say, hey, mom, can you add me to your credit card as an authorized user or an owner? Owner's better, but authorized user. Can you add me to your credit card, please, mom? Mom, please, remember me? Please, please. Mom says, what are you going to do with my credit card? You say, I'm not going to do anything. In fact, when it comes in the mail, you can shred it. I'll never buy anything. But I would like to be on there as an owner, because credit has no memory. If I pull your credit today and you're an owner of that, it'll show that you owned it for the last 10 years. It doesn't remember last month you didn't have it. Now you have 10 years of your mom's history. Your credit score can spike 60, 80 points like that.
Boom.
Like that.
That's the fast hack, guys.
That's the fast hack.
Now, once they take you off that credit card, it's going to drop back down to
Yeah,
wherever it was.
because it
but
has no
it'll
memory.
Get you into a house. It'll get you into a house.
Yeah.
All right. Got to that one. B. Andrade, hello.
What's up, B. Andrade?
Now we have Kindness B. Celebration by Cooling the Grant.
Celebrate good times. Come on! Damn, you see that?
Yeah, I like that.
Dude.
Leader and the Finance Man followed us.
What? Dude, that's badass, dude.
He's okay.
Yeah.
B. Andrade, can student loans be excluded from my DTI if someone else is paying them and I can prove it?
B. Andrade, if they're someone else's, yes. If they're yours, probably not. So here's what happens. Let's say that my son goes and he's like, hey, I want to go to college, Dad. I would like to borrow $400,000. I'm like, what?
What are you gonna be when
$400,000
you
is going to be
grow
a
up?
doctor, or is it going to be a
Astronaut?
astronaut? Yeah, it's going to be an astronaut. So anyway, he goes and says $400,000. I'm like, okay, oh my God, that's crazy, but okay, whatever. Borrows $400,000. Then he starts paying on the payments. I'm a co-signer. He's the primary borrower. And for the next 12 months, he pays $4,000 a month the way he's supposed to. That's a lot of money. $4,000 a month.
Big money.
After 12 months, I can be excluded from the liability. As long as he's made him from his bank account for 12 months without being late. If he's done that, I can ignore it. But if it was my debt, can't ignore it.
Yep. Kindness B, 100K a year. Credit score 560. What house can I afford?
That's not the question you should be asking,
No.
Credit B. That is not the question you should be asking. 100K a year is great income in most places.
Congrats.
Most places. In New York, poverty. In Los Angeles, poverty. Miami, poverty. But in most places, you're a baller. Okay? So if you're a baller, that 560 credit score is a very big problem. Not a small problem. A very big problem. Why? Because something caused that 560 FICO score. You earned it. So somebody lent you credit, somebody lent you money, and you did not pay it back the way you were supposed to. Because if you did, you would have an 800 FICO score. But you didn't. And because you didn't, that's not going away. Not for a very, very, very long time. So if you have 100K a year and you had a good credit score, I would say 420, 450. Let's go today. $450,000 today. Let's go. But because you have a 560 FICO score, that's your biggest problem. That's a problem. It's not a small problem. It's a big problem. But it's a problem that we can fix. So call us and we'll work through on how you fix it.
Level Up Mindset. Best ways to get your real credit scores from experience. Credit Karma is not accurate.
Okay, so level up. Mindset. Level up. Level up. Credit's a big scam. It's a big hack, but it's also a reality of life. So, the credit reporting agencies sell their services to a whole bunch of people. They sell it to auto dealers. They sell it to credit cards. They sell it to mortgage lenders. They sell it to a whole bunch of people. And they all get something different. And it's not just one. FICO is the biggest one. That's what most people know. But there's a smaller one called Vantage, and they're making a play for the market. But if we went FICO and you went to a credit card company, they use, I think, FICO 8. I think it's 8, right? 8 or 3.
Credit cards use 8.
8. So credit cards use FICO 8. So the credit card companies, or I'm sorry, the credit reporting companies sell that algorithm to the credit card companies. But they sell a different one to the mortgage companies. Mortgage companies is FICO 5. There's FICO 3, FICO 8, FICO 4. There's a whole bunch of them. There's also Vantage, and Vantage has different ones. So if you're pulling, one, you have to have the knowledge to know which one am I pulling. And then second, is it current and accurate? Because remember, if somebody's giving you your credit score for free, nothing is free in this life. That's a very expensive lesson. If you are not paying for the product, you're the product. Which means they'll pull your credit, give it to you for free, and sell it to somebody else. And inside of that agreement that you signed saying, yes, I would like my free credit report because it does not cost money for these computer systems and algorithm electricity and people in the back end and software engineers and nothing like that, because I believe everything is free in this life. It's not. You're the product. So the best way to do it, have a licensed loan officer pull your credit. That's it. Call us. We'll pull your credit. We won't charge you anything. Pull your credit. We'll tell you what it is. We'll tell you which problems are. Because even if you got it through a Credit Karma, freecreditreport.com, lowermybills.com, there's a whole bunch of them out there. What you see is not going to be what we see. And it's probably going to give you a false positive or worse, a false negative. And you will be operating on inaccurate data. So the best way to do it is call Chris.
So Level Up Mindset, thank you for letting the world know that Credit Karma is not accurate. We have 200 billion people watching us right now, and all of them need to know this. So thank you for that. CC26, what is a new DPA I'm getting spammed about today? I don't know, man. What does it say? What's spam?
Yeah, what are the spam happening, man? What's the spam? Douglas Vins.
Yeah, thank you for
Appreciate
the love.
Douglas Vines. Social media insurance.
Thank you for the love. Roger Salcedo. Chris, what's your email? I can't see it on your sign. I wanted to email you and Lee.
Holy smokes.
Okay, screw it. Time for a commercial.
Chris.Dominguez@nafinc.com. Lee.Duran@nafinc.com. If you need a badass loan, call a badass loan officer. You can reach your badass loan officers at New American Funding. You can call them directly on their cell phones at the numbers on the screen. But don't call right now because we won't answer. Duh, we're live. Our phones are being used. This will disappear in 5, 4, 3, 2, 1, bye. Rue Almighty. Rue. The only thing I can think of when I see Rue is Hunger Games. Hunger Games.
I think a kangaroo.
Rue died.
Michael Del Aquia. HELOC versus HELOAN. And can I take out more than the equity I have in my home?
Very.
Was that a rap? Are you a rapper?
Michael Delakia.
I think he's a loan officer because no one knows about HELOAN.
No, nobody knows about HELOANs. HELOC versus HELOAN. Can I take out more equity than I have in my home? No, Michael. Just simple. No. 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 That did not go well. No. 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 And Michael, even though you've put a lot of time into your name, because there's Del, and then there's the Enya, and then there's or asterisk, and then
Enye,
and then Akia. You only have 22 followers, so we don't think you've been around for very long. Anyway, moving right along. What's a good range of credit?
Liam's mommy.
What's a good range? I don't know how to answer that question. A good
I do.
credit score is 800. What's a good range?
So if you want to buy a house, if you actually want to get approved, 620 to 850. There's your range.
Okay, that's a good range. Okay, I get it. Yeah, good.
So can we do to a 580? Sure.
Yes, we can.
Challenges.
Yeah. Can we do to 500?
Sure. Challenges. Yeah. Can we do to 500? Sure. Major challenges.
Much monster challengers. Okay, so my lease isn't showing. Dude, you messed up.
Oh, we missed
My lease isn't showing on any of my credit reports. Will account against my DTI.
Ooh.
Ms. Bass. So, probably yeah. But the only way we know is to pull your credit. And when we pull your credit, we go off that official credit report. If it's not showing, I don't see it. I don't know what it's there. It could be under somebody else's name. Could be not your lease. You could not be liable for it. Whatever. But we have to pull your credit to find out. That's what's going to happen.
Load up the chat box, guys. We're going to answer all your questions.
Dog. See how many followers Dog has, because he's sitting here just outing NAF. Outing Dog NAF.
He's sitting in his mom's basement.
He said, we don't know about that. We don't know. Dog. What's up, Dog?
Where do you think he's sitting?
What's up, Dog? Are you Snoop Dogg?
Yep,
He's
mom's
got
basement.
28,000. No, he's got 28,000 followers.
From his mom's basement.
That's Dog's badass. Dog.
You got a fan, Dog.
Dog says NAF blows. NAF blows. I don't know what that means, Dog. I don't know what that means.
You got a fan?
Yeah, we got a fan. Yeah.
Trisella. Hey, guys, I'm 21 and have 40K in savings, make 70K a year, 715 credit score. How much house can I afford?
Trisella, first thing I got to tell you is that's a badass profile for 21 years old. 21, if it's 21 years old, you got 40 G's in savings. K is G, same thing. So 21 years old, 40 G in savings, 70K a year. You are a catch. You are a catch. How much house can I afford? It's going to depend on your property tax base a lot. But I'd say you're 280 to 320, somewhere in that range. And with that good of a credit score, you'll probably get it. That's a very good profile. Love to see that. Keep up the hard work. Keep up the good work. It's not easy to be there.
Kindness B, California.
California, I know what that means.
California
knows how to party. California knows how to party. There's a reason we're not rappers, man. Actually, we are rappers, huh?
I am.
We have a rap.
You can call yourself one, but you don't.
Realestaterapp.com. Realestaterapp.com. We rapped the song. It's hilarious. We rapped the song. Kind of made it famous.
Dope.
It was stupid, but it kind of made us famous. Realestaterapp.com.
Danielle anyway. Shaw, I don't even know you.
I don't even know you either, Danielle. I don't even know you. It's like I don't know you. It's like you don't know me. It's like we've been in a relationship for a very long time, and you don't even know me.
T. Sands, for a first-time buyer, which is better, FHA or USDA?
T. Sands, that's not really the question. It's not really the question one asks. Is it?
I know the answer.
Just be honest with me. It's not really the question.
I know it.
So, they're different programs entirely. They're both federal government, but USDA is geographically driven, which means the property has to be approved before the buyer is approved. And the way you do that is you go to USDA.gov, it's zero down, but it's only in rural areas. It's areas where the government wants people to start moving to so they can populate it. And the way they incentivize people is by allowing a USDA loan to be done in these areas. And if the property is there, then they'll approve it. Now, here's the good news of USDA. It's zero down. And the MI isn't called MI. It's something, it's called GI, I think. It's called GI. And it's cheaper. It's cheaper than FHA. FHA is going to be 3.5% down, 3.5% down. And the MI is going to be 0.55 if you put 3.5% down. If you're going head to head, and I have the opportunity to do an FHA on a USDA property, I would rather do USDA. But most of it doesn't work that way. That's not how life works.
I'll be honest with you. I'm not a fan of USDA.
You're not?
It's such a small box that
Yeah.
people fit in. All these people, and only this many can actually
Yeah.
use it, qualify for it, blah, blah,
But
blah.
they like to hear zero down.
They
People
do.
love to hear zero
It's
down.
good marketing. Everything's marketing, guys. People are trying to scam you.
Brianna, we've been trying to go back
No,
outside.
you haven't. No, dude, I've been asking you every day.
I wanted to go today. Today. We're going next Friday for sure. We actually booked it. We're going back to Victoria Gardens, and we're doing appointments in the morning, and then we're going to do a live from Victoria Gardens again. But in the meantime, we're trying to go live locally. If you're local, anybody who's local, hit us up.
Local?
Like loco? Are you
mean
local?
local?
Hold on, let me. Okay.
I'm not handler. Mama, is that you? Mommy, mama.
I don't get it.
It's
Yeah.
Stewie, man. Come on.
Who is Chris and who is Lee? That's a very good question. We ask that
God.
all the time.
It's confusing because the way that's set up. And
He's
then
Chris.
Yeah.
I'm Lee.
Yeah.
He's Chris. I'm Lee. We're kind of a big deal.
Ask his mom.
Ask my mom. Yeah.
Brad Aiken. Why if I don't have a score?
Why?
What if? What if I don't have a score?
What if I don't have a score? That's not a problem, Brad. It's really not a problem. It's really not. If you got a 2-year work history, and you got you some money, and you pay your bills on time, but you... Wait a minute. You say work history?
You said work history.
No, I was going to credit history.
You on that
That's a
wacky
big
tobacco,
problem.
man?
That's a big problem.
You're on that wacky
Brad
tobacco.
Aiken, if I don't have a score, no, a score. He didn't say work history. He said score.
He
What if
said
I don't have a
score. You
Yeah.
said work history.
Okay, so if you have a work history, a 2-year work history, and you got a down payment, but you don't have a score, like literally you pull your credit and it says NA or 0 or no score at all, none, 0. I can do something called alternative credit. Alternative credit's very simple. They're like, hey, how come this guy doesn't have a score? Okay, we pulled for everybody. We can't find a score. All right, Brad, have you paid your electricity for the last year? Yeah, cool. Prove it. Just prove it. Have you paid your gas bill for the last year? Yep, prove it. All right, cool. Have you paid your rent for the last year? Yep, prove it. And you'll show me all your bank statements and say, hey, I paid this on the 1st. I paid this on the 1st. I paid everything on the 1st. Cool. I build your credit file. And then I have a whole set of guidelines. It's called alternative credit. And I get you a house. Pretty simple.
I got an easier way.
Okay.
I would go that route if you don't have anybody to help you. If you don't have anybody to help you, I would go that route. But the credit hack that we spoke about 10 minutes ago will also solve that problem.
Yeah, it will. It'll give you a credit history like that, and it'll be a good one. It'll be a good one.
You have like a 700 like overnight.
Larry Shapiro, how strict is a VA inspection? That's a good question. It's pretty strict, and it's good. It's pretty strict,
I like it.
and it's good.
I
Do you
love
know
it.
why? Because the inspection is designed to protect the veteran. A lot of people want it to be easy, but the truth is, if you get through a lazy, easy inspection, you could have a roof problem, you could have foundation problems, you could have termite, you could have all kinds of things that could be bad, and the only one who's really going to hurt is the veteran. So the VA inspection is a little more strict, and the one thing that pops up, termite. On an FHA, if seller and borrower say, hey, we don't want to know if, I don't want to tell you if there's termites, and you don't want to ask. They can say that, and they sign a document saying, I don't want to tell him, he don't want to ask, and waive it. On a conventional, you can say, I don't want to tell him, he don't want to ask. Waive it. Now, who is this bad for? It's probably bad for the person who's moving into that house and goes, hey, I didn't want to ask, but I probably should have because there's a lot of freaking termites in here. That's probably bad for the person buying the house. VA, you can't waive it. You cannot. Does not matter. Cannot waive it. You must have termite.
Brianna Monet. Is it better to move in winter? Texas market is going down. It is. It is. Well, if you're moving to Texas, I would move in the winter. I would not be lifting heavy shit during the summertime in Texas, depending on where you live, of course. Because the weather, the Texas sun, is it different?
It's Texas gets
It's
hot
different.
and it gets cold. Occasionally we get storms in there.
Different.
I was there one time when we had like the 100-year storm, and literally the whole Texas got snowed out. I was in Austin, outside of Austin, and the whole area got snowed out. And I have 3 4-wheel drives there, so I was just like having a blast. It was a blast. I have a ATV and 2 4-wheel drives, and I was just having a good old time there.
Yeah, hold on.
Okay, cool.
Jeremy's catching feelings.
Uh-oh.
Why y'all skip my question? And he's correct.
Jeremy, did we
He's
skip your
correct.
question? Jeremy, we're
It's
going
not
back.
a question, though.
Okay,
All he
cool.
said is, from my FICO? No question.
I don't see the from my
Right
FICO.
there, see? From my FICO.
Okay, cool.
What's the
I don't know.
question,
Yeah, what's the question? There's no
Jeremiah?
question
What's the
behind it.
question?
Yeah.
So if you're asking if from my FICO is accurate, nope, garbage. Not going to
No.
work for you. Not going to be the same as what
Yeah.
we pull, if that's your question.
Yeah.
But I have to guess and use my mental abilities to try to figure that out. Not disabilities, abilities.
Okay, cool.
Don't get it twisted. All right, let me find where
All
we're
right,
at now.
cool.
Bree Smith, what FICO score is used in Texas? Sorry if the question's already been
Bree,
asked.
you can ask it 2, 3, 4,
Yes,
5
don't
times. We
worry.
don't have a problem with it. We even get some people that really come at us that don't want real information. They're like, hey, I'm a conscientious objector. I don't think the banks really lent you money, so you don't owe them anything. It's hilarious.
Or the guy that was like, mommy.
Yeah, there's somebody who comes here on people come on here and like, hey, mommy. What FICO score is used in Texas? It's not just Texas. It's across the nation, and it's called FICO, Fair Isaac Reporting Company, Corporation, something like that. But it's FICO, and it has to be, if you're buying a house, it has to be a loan officer's FICO, FICO 5. So we pull the credit. We don't charge you anything for it. We'll actually show it to you. We'll tell it to you. We'll give you a copy of it. We'll teach you what's wrong with it. We'll let you see what we see. That's different than if you went to freecreditreport.com, lowermybills.com, or wherever. It's different credit pools.
Nice. Brianna, Lennar said Lennar is having trouble right now. Ooh, and D.R. Horton is getting sued again.
Yeah, these guys, they're always having trouble because many times I've told you how much money is in this business, how much money Lennar makes, how much money DR makes, how much money, give me another one. Frontier makes, and then KB, and then those are the big ones, probably all the big ones right there. But they make a lot of money. If you want to know, ask. I'll actually break it down for you guys again. But when you make that much money and you screw people over that hard, sooner or later, someone's going to sue you. And that happens a lot.
Dang. I hate builders. Alondra, is it a bad idea to buy a house with your boyfriend?
Alondra.
Not married.
So, here's the first question.
Not married.
Here's the first question, Alondra. Are you going to keep this guy around? Are you going to keep him around? Is he going to keep you around? If you are going to keep each other around, not necessarily bad. Not very bad.
But stay not married.
If you're not going to keep each other around, you are going into a 30-year obligation most of the time. 30-year obligation. So, you may not be married, but you're in a 30-year contract together. Don't
get married.
And there is a very big piece of real estate on the line here. So, if you're going to do it this way, you should really have it worked out well. Because it can be, hey, we were in love and we bought a house and it was worth $300,000 and we were in love up until about 10 years and then we weren't in love anymore. And we don't owe $300,000, we owe $200,000. It's not worth $300,000, it's worth $600,000. Holy smokes. So there's $400,000 in equity in that house. Is that real? That's real. That happens a lot. So if you set it up correctly, y'all are done being in love, sell the house, you get 200 G's, he gets 200 G's, loans paid off, and that relationship actually meant something. It meant 200 G's because you did it that way.
There's good memories, I'm sure.
I'm sure there's good memories, but the 200 G's is going to be a very good memory. It's going to be a good memory because you're like,
remember?
hey.
You remember?
We broke. Well, how many times have you broke up with somebody and got $200,000 in the process? Probably never. Well, if you do it correctly and you set yourself up correctly, that can happen that way.
Never.
But usually what happens is somebody goes, I hate you. I'm just moving out.
You hated me on Tuesday.
You're the third person who's hated me this year. So, I hate you. I'm moving out. Oh, yeah, I'm not paying the mortgage. Well, neither am I. and it gets ugly. So if you do it correctly, it can be done right.
Don't get married.
Yeah.
But here's the thing, guys. So in certain states, you have something called community property. It's a legal term, blah, blah, blah. I'm not an attorney. But when you have community property and you're buying a house together and you're married, regardless of what's happening with each other's credit, you got to combine those debts. In non-community property states, if you're married, you can separate them and there's no problem and you don't have to commingle the debts. So don't get married. Brianna, Texas just had a tornado.
A tornado. If you listen to the country music, there's Texas tornadoes all the time. Country music says, Texas tornado.
Are you saying that country's lying to everybody?
No, I'm trying to say the truth.
Are you calling them liars?
No, it just said.
Is that what you're doing?
Brianna just said Texas had a tornado. What part of Texas?
Now he's all concerned. He's like,
I'm
my
like,
house.
yeah, I know. How's my house?
Creation
Well, actually, I heard
clause.
there was some big rain coming, big hail, golf ball size hail, supposed to hit this week and next week.
Creation clause 8. Is Credit Karma reliable to view my credit score?
No! Let me say that again in case you didn't understand it. No! No. Hey, remember, anything that gives you your credit report for free, nothing's free in this life. It usually takes many years before you figure this out. I've actually known people that say, hey, I got an email that says I won the lottery. I'm like, did you ever buy a ticket for the lottery? No, but this happens. I mean, it happens. People win the lottery.
Maybe I did it. I don't remember.
People buy tickets. People win the lottery all the time without buying tickets.
Are you talking about my family members again?
No, I am not. I am
Maybe
not.
I did.
I am not. So it's just downright frightening. Here's the lesson in life. Nothing's free. If something's free and you don't pay for the product, you're the product. Hey, guess what? How much do you pay for Facebook? Nothing. Who's the product? You're the product. How much do you pay for Instagram? Nothing. Who's the product? You're the product. How much do you pay for any of this stuff? If it's social media, TikTok. How much do you pay for TikTok? Nothing.
How much you paying to watch Chris and
You're
Lee
the
right
product.
now?
How much you paying to cross Chris and Lee right now? You're the product. We're trying to sell something to you. I don't know if you know that, but we're trying to get you to be a homeowner
Hell
and
yeah.
use us as a loan officer.
Hell yeah.
Cool.
But Credit Karma, good for a few things, just not credit score.
Yeah.
Jeremiah Benton, it should be there. I asked the question 2 times, but it's all good. All right, Jeremiah, ask it again, man. We'll answer it. Bree Smith, you're welcome. She said, thank y'all. She's from the South. I can tell.
Bree, yeah.
Alondra, should I buy new construction house in Cali? 5,000 square feet, 1,600 living space. Oh, square feet lot. 1,600 living space, paying $31.58. What? How expensive is that house? That's $31.58.
New construction in Cali, which tells me it's a whole category on its own because that's expensive in California.
$31.58 a month? Like how much you putting down? $300,000?
Yeah, I don't quite get it. 1,600. I think it's a 1,600 square foot new build
Yes, that's what
with
she's
a
saying.
5,000 square foot lot.
Yes. So the houses that you've seen that look like this, for a
31.58.
you need like a $200,000 or $300,000 house. There's
Yeah,
nothing
that's
for like that in California.
no, you could like in some areas.
What
like,
area? New
way-
build like that?
Barstow maybe. No, not even Hammett no more. Can't get Hammett anymore. Blythe, maybe Blythe.
406 putting $14K down. That's a $380, not $88,000 loan. 31. I'm gonna disagree with that.
Okay, all right.
I'm gonna say that payment's too low. Maybe that's marketing without your taxes and insurance. I don't know. But
Okay.
Alondra, call us. We'll work up the numbers.
All right, cool. AW. Hi, guys.
AW
What's
in
your
the house.
feedback on Meritage Homes?
It's a
Well,
builder.
because Meritage is a name that is not
What the?
kicking up right at the top of my thought process. Dude, did we just get banned? Oh, did we just get banned? Did you?
Stupid ass iPhone.
Okay, can you still hear us? Okay. Houston, we have a problem. So here's the catch on these. If it's a smaller builder and they don't have the infrastructure to mandate a realtor and a loan officer, they're not usually bad. They're making their profit on the front, which is cool. I'm okay with the builders that make their profit on the front
Get money.
because they say, hey, I'm going to build a house for 400 grand. I'm going to sell it for 500 grand. My mark is the profit. That's fine. I got no problem with that. Those guys are good. I love those guys. And maybe Meritage is one of those guys. We run into those sometimes. But here's the problem. When they get big enough, they say, hey, you know what? There's an extra $30,000 on the realtor side. How? 3% on the buyer side, 3% on the seller side. There's 30 grand right there. So if I can pay a realtor full time and I can muscle the people into just using that realtor, I don't have to pay realtor commissions. I can make a lot more money. And then they find out there's money on the loan side. So there's 3% on the front, 3% on the back, $30,000 again. And they say, well, I'll just make them use my lender. So now they've taken your representation out for realtor and your representation out for lender, and they've made an extra $60,000. Then it starts to get dirty because they say, hey, listen, I'll increase the tax base because I'm big enough to do this. You have to be a big builder to do this. I'm big enough to do this. I'm going to increase the tax base by having a vote. And nobody lives here yet but me, so I'm the only one who votes, so I vote yes. Let's make a $10 million bond to build a park. Beautiful park. $10 million bond, and I'll build it into the tax base. Now, they kind of screw you over in the tax base. The only ones who do this are the bigger builders. The bigger builders. The smaller builders, they're hacking out a living, and they say, hey, I built a house for 400 grand, selling it for 500 grand, and that's it. It's all transparent. It's when you get to the bigger ones, the big ones, the Lennards of the world, the KBs of the world, the Heritage of the world, they know how to play the game so well, they screw the end user a lot.
Alondra said, yes! I don't know what that means.
I don't know either.
First time home buyer. All right, yeah, we can help you with that.
Yep.
Call us, man. Brianna Monet, sorry. I would say no. Don't get a house with your spouse if you can afford it on your own, is what I think she was meant to say.
Yeah, I mean, Brianna Monet, that's a very touchy situation, man, because we deal with married couples and non-married couples all the time. We deal with, hey, should you co-sign for your son? And there's a lot of people on this feed will say, don't ever do it. Your son will screw you over. I don't know about that. I really don't know. But I would co-sign for my son because he's a responsible young man. He's very, very responsible. Co-sign for him like that. I would do it. Do I know there's a liability? Yes. Okay, cool. So let's say I go into a relationship and I buy a house. Would I buy a house with a significant other? Sure. If I thought that relationship was going to work. And if I would set it up in the beginning, so if it didn't, they're still taken care of. They're going to be taken care of. But that's the way I deal with things. Depends on the people, like everything.
Jay, I qualify for FHA and USDA. Which one should I do? I want to build a house.
Oh, Jay.
Everyone wants to build a house.
Jay, you just said way more than you think you did. Because if you qualify for FHA, it's great news. It's awesome. If you qualify for USDA, that's great news. It's awesome. They all have something called a one-time construct, which is a whole different process than a normal USDA qualification or an FHA qualification. The one-time construct involves a property manager, a project manager, a general contractor who's licensed, subcontractors, and a whole bunch of stuff. Multiple loans, series of things, timed releases of funds. There's a lot going on there. So, given the choice between those two, first off, I don't know if you can get an FHA in an area where USDA would approve. So I think that prohibits itself because USDA is very rural and you need comps in order to get FHA. And if you can't get comps for an FHA, you can't get a one-time construct because you need a once completed, total completed appraisal. And that's pro forma. Everything is guesswork. And the only way you can guesswork that is with comps. And if you're in a USDA area, you're probably not going to have a lot of comps. Just not how it works. What do you got?
What it is. Pamela, paying off student loans help or hurt my credit score, and how much can I qualify for?
Pamela, you should talk to us first.
Heck
because sometimes paying off student loans is not the best move to get more purchasing power. More purchasing power because student loans are very easy loans to factor in. Because if you owe 100 grand, it's easy. I have two formulas, 1%, which is 1,000 a month, or 0.05, which is $500 a month. Those are easy to factor in, 100 grand. But if you owe 100 grand in credit card debts, it is not going to be $500 a month. It's going to be way more. So there's ways to deal with this. We can help you.
Yeah. Andrea Benson. Can you buy a house with two different loans, meaning that my husband and I applying for two loans?
So the answer to that is yes, but not in the way you're stating it.
People not happy in their relationship.
Yeah, people. Yeah, so
I don't trust him.
yeah, I don't trust him either. So can you buy a house with 2 loans? So 2 different loans. I can do an 80-10-10. An 80-10-10 is 80% conventional conforming Fannie Mae or Freddie Mac, 10% from another lender entirely. So that's 2 different loans. And then you put 10% down. What's the benefit of that? There's no mortgage insurance because you have 10%. That's another loan that you can pay off at any given time without affecting the primary loan. So that's called an 80-10-10. So you can buy a house with 2 different loans. However, if you're trying to say, hey, tell you what, I'll get 50% of the loan on my name and you get 50% of the loan in your name, yeah, that's probably not going to happen. It's probably not going to happen. And the reason is because the minute it goes into escrow, you have an escrow number, and that number is tied. And that escrow number, the minute I send my loan in, my loan number is tied, and they cannot be separated. They cannot be. Once my loan number is tied to that escrow number, the whole world knows this is the loan, this is the loan officer, this is the bank, this is the escrow, this is the type of product that we're dealing with. If another loan comes in and says, hey, I'd like to be tied to this too, they're going to go, whoa, 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 whoa. That's a no. That's a no.
Yep. Brianna Monet back. She said, she told A-Dub that she's thinking about buying a Heritage home as well.
Now, Heritage could be, Heritage is actually a pretty big name. Heritage is it's a big name, so they play these games, and once they start playing these games, they screw the buyer. It's just the way it is. Sometimes it's worth the extra money. The only part I don't like about it is it's hidden in so many different ways that unless you're in the business, you don't know how to decipher it. Even if you're in the business, you probably don't know how to decipher it.
Ost 543, credit score is 788 at 27. How am I doing? You know how you're doing, man. You're just showing off.
You're just flexing, dude. You're
Yeah,
like, hey, check this out.
Like, is this big enough?
Yeah.
Is this big enough?
You know the beach is over there.
Alondra, it's worth 406, putting 14K down with FHA in Madeira. So Madeira is just outside of Fresno, right? I think it's outside of Fresno.
Yeah,
so Fresno Valley, yeah.
406, 14K. That means you're 406. You're at 380. If you bought down the rate, yeah, that's pretty damn good. I mean, if you could pull that off, that's great.
Is that a new build?
Great.
Did she say it was a new build?
If it's a new build, here's the.
Oh, that's what they're doing. The incentives. They're throwing incentives at the rate.
Oh, make sure it's not a 3-1 buy down, 2-1 buy down, because if it is, they're going to say, hey, here's your payment. But next year it's going to go up, and the following year it's going to go up, and then it's going to go up even more. And while the rest of the world is going to go down based on what the Federal Reserve says, you're going up. So
It is.
just think about that.
Everything's showing up backwards.
I
Was
don't
this
understand.
always backwards?
Yeah.
This is the view that we see is the view that they see, right?
Take a look at that. I told you, it's the reason we do this is because we flip some of it.
You don't tell me. You don't tell me.
I tell them.
You don't tell me.
Some of the platforms flip it. Some of them don't
I got
flip it.
confused
Yeah.
all of a sudden.
Yeah. So
Valerie James told Austin, "You're doing great. How are the other 2 scores?" Valerie's good job, Val.
Val, yeah.
She knows what she's doing.
She's like, hey, this is a kid.
She's like, "What's your income?"
Yeah. Are you over 6 feet tall?
A-Dub. Uh-oh, they do that all the time. Title insurance.
Yeah, they do. I don't know what you're talking about, but yeah, they do.
Alondra, thank you for the follow. Thank you for the
Appreciate
love.
you. Appreciate
User,
you
whatever
guys.
That number is. Thank you for the love. Crystal 1983. Can you have 2 VA loans at the same time?
Crystal 1983. I remember you. I remember you. Yes, you can.
From 1983?
Yes, you can. 1983.
He
yes,
was there.
You can.
He
I
was
was
there.
there. I was there. 80s are badass. So, yes, you can, but there's a lot of catches. It's not so simple and not so straightforward. The first one is easy. It's straightforward. There's no loan limit. You can get no loan limit on the house. It's badass. It's amazing. You can do that. The second one, there's a lot of limits.
Ooh.
Not a little bit, a lot of limits.
Give me one.
Okay, so first off, there has to be a reason. You can't just go because I wanted it. That's not going to work. No. If your job moved you, that's a reason. If you got a PCS, permanent change of station, that's in the military, and you bought a house in Virginia when you were a little E4, and then they shipped you off to San Diego, and now you're an E6, that's a PCS. You can have a new loan over here. Permanent change of station. That's active duty. If your job moved you, you can do it that way. There are certain reasons, but there's also another limit. And that's going to be called second tier entitlement. Second tier entitlement says you used a lot of your entitlement on this first house. You don't get unlimited on the second house. So it's going to go based off loan limits, how much you utilized, how much is left over. You may not be able to get in for zero down, but sometimes you can. So the answer is yes, you can. 2 loans at the same time.
Bosch Joe Hall, do you know any home insurance that covers paranormal activity?
I love it, Bosch. I love it. I love it.
Ghosts are tearing up my house.
Yeah, those ghosts stink. There was a ghost in that bathroom.
It was the ghost.
That was the ghost. Wasn't the dog. It was the ghost.
Mano Boy 504. Do underwriters want W-2 or return track transcripts?
Yes. Yes.
They'll get both.
Yes. You get no choice.
They gonna get both.
Yeah. If you give us transcripts don't work for us.
Don't give us transcripts.
Yeah, don't give us transcripts. You think you're doing us a favor, you're not. Give us your W-2s. We'll put together the file. We'll send the underwriter the W-2s. We'll say, here's how we qualified this file. We might not even send them the 1040s. We're just going to send the W-2s. And we're going to say, hey, this client sent me W-2s for $120,000 a year. It's how I qualified the loan. I'm sending it back for underwriting. You know what the underwriter's going to do? They're going to exercise that 4506T that you signed, and they're going to pull your transcripts. And the transcripts, they're not looking for what you wrote off or anything like that. You know what they're looking for? Hey, does the IRS have as much income on W-2 as you do? And if they line up, no problem. You're not even know what happened. If they don't line up, we got problems.
Oh.
No, we don't have problems. I'm gonna lose a little. I'm gonna lose a little bit of commission, but you have big problems because that's an indication of fraud, and they will pursue it. So don't give us transcripts. We're
I just discovered that his name is Man or Boy, not Man or Boy.
okay.
Knack 2383 Kristen Lee banner shows up reverse in the background.
Appreciate you, Knack.
It was yesterday too.
I appreciate you, Knack. Oh my God, you're
At
right,
least
Knack.
we're consistent.
Yeah. Depends on what platform you're on. If you're on Instagram or TikTok, Instagram or YouTube, it's right faced. If you're on Facebook or TikTok, it's backwards.
Alondra, here we go. Buckle up. Thoughts on Cal Half a Dream for
Alondra.
Dream for California.
Yeah.
Or Dream for Gavin Newsom.
Dream for Gavin. So I'm gonna give you the real quick story on this, Alondra. You're gonna love this story, okay? So here's what it is, okay? It's like having an uncle in the mob. Uncle in the mob. Birmingham, Alabama. What's up? I'll talk to you a little bit. So it's like having an uncle in the mob. You go up to your uncle and you say, hey, Uncle Cali, because that's California. Mob, get it, Cali. Uncle Cali. You're like, hey, Uncle Cali, I'd like to buy a house, but I can't afford it. And I know you got a lot of money. I don't know what you do for a living. I don't want to know, but I know you got a lot of money. Uncle Cali, can you help me? Uncle Cali says, yeah, sure, no worries. Yeah, I'll help you get a house. Go get yourself a $500,000 house. Pick out something nice. Something nice. Yeah, that's great. $500,000. Cool. You know what? 20% down is a good amount. Uncle Cali's going to help you with 20% down. Yeah, cool. You got a $500,000 house? From Uncle Cali, here's $100,000. $100,000 for you from your Uncle Cali. Hey, you don't have to say thank you. That's okay. Yeah, you're in the house now. We love that. We are in real estate business together. You wait a minute, Uncle Cali. What do you mean we're in business together? What do you mean we're in it together? Oh, yeah, don't worry about it. Forget about it. Yeah. You know that $500,000 house we bought together? Yeah, I put $100,000 in. Yeah, I put $100,000 in. Yeah, I thought you were helping me out. Oh yeah, I helped you out. You got a house. And we put $100,000 in. Yeah. Don't be stupid. I want that $100,000 back. No, I want it back. Let me make this real clear to you.
What accent is that?
I want it back.
Where's that
Dude,
from?
I'm messing up my story. So I want it back. Oh, and by the way, I want it back with interest. Forget interest. I don't want interest. Houses appreciate much faster in California than interest rates. I want shared appreciation. So, you and I, we're in business together. Yeah, your Uncle Cali, we're in business together. We are you and your Uncle Cali. You're in I want my $100,000 back, and I want it with equity appreciation. And by the way, let me make this real clear to you. Even though I'm your uncle, I get out first. If only one of us gets out of this hole, it's me. Are we clear? Forget about it. Your Uncle Callie's here for you.
Is Uncle Callie on the spectrum? Where's he from? New Guinea?
New Guinea.
Where is he from?
You got New Guinea out of that?
What accent? Is it?
Dude. Navy Mom Donna. What's up, Navy Mom Donna? Yeah.
Navy Mom Donna said, is Lee wearing pajamas?
Pajamas? Shit, Sam. Pajamas with a collar. I know.
Shots fired. Shots fired.
Shots fired.
They're pajamas.
Hello from Birmingham, Alabama. What's up, Birmingham, Alabama? Carla. Exclamation point.
Good pronunciation.
Dude, I know.
Uncle Callie.
Yeah, Uncle Callie.
I don't know.
I just went Mexico on that one, man.
She wants to know, will homeowners insurance pay for home improvement?
No. Well, we go back to the mob scenario.
If it burns down,
if you accidentally,
if
you accidentally burned your house down, and then you needed a better kitchen, you probably get a better kitchen. But I would not recommend doing that.
No.
Yeah. Do not recommend doing that. Home insurance does not pay for home improvement. That's all on you. All
insurance is for just in case stuff.
Yeah, just in case stuff. Yeah, that's how it works. So I hope I answered your question on down payment assistance programs.
Trista, thank you for the love.
What's up, Trista?
Rolling with the Chavia. Is it smart to take out equity to buy a second home?
Rolling with the Chavia. Sometimes yes and sometimes no. Here's why. Because that taking out equity costs money. And if you're doing it in a more populated metropolitan area like Los Angeles, Miami, New York, Chicago, Houston, Dallas, probably not a good idea because the math doesn't math. But if you're buying in a more favorable state, like what's a good favorable state right now?
Florida.
Florida's a good. Well, no, Florida's Miami, but Michigan, Tennessee, Alabama, Arkansas, the maths in some of those areas. So sometimes it's a good idea from a financial perspective. We're only talking from a financial perspective. If you're talking from a personal perspective, hey, I just need to live next to my son, daughter, cousin, whatever, that's a personal decision, and it may not be financially sound, but it might be personally sound.
Dude, Rolling with the Chavia is in Miami now.
What?
I'm in Miami. Okay, so here's the thing. You just don't buy the second home in Miami. You go across the state to the other side of the waters, and you get more affordable properties.
Don't go to California.
Yeah, don't go to California. It's no buenos. That's Spanish.
Yeah.
All right, what do we got here? A-Dub said, Orale!
Orale! She said, she got it. She laughing. Orale. Got my orale down. I was raised in Santa Fe, New Mexico. Orale. Right outside of Española.
With the lowriders?
Yeah, can you explain down payment assistance program really good?
You explained really good.
We didn't get that. Thank you. We appreciate you. I hope I tell you.
Let me give you more additional data on that.
Okay,
That's
cool.
one of the many programs that are out there. And if you've listened to us in the past, we always say, hey, if you're going to use a program, use your own money in that program. Don't use down payment assistance if you don't have to. But if you are going to use down payment assistance or you need down payment assistance, the one that he was explaining is one of the bottom of our list. No doubt about it. It is the bottom of the list. There are many above that one, so there's others that you can have an opportunity to buy a house with, so don't let that stop you.
Yeah, and that being said, that doesn't mean it's bad for everybody. Not bad for everybody. Occasionally, somebody says, hey, I can't afford this without this program. And I would say, hey, if it means a difference between you getting in a house right now and being a homeowner or being a renter for the next 3 years, be a homeowner. Be a homeowner. Yeah, that's it.
You got it. Dylan Brunton. If the economy begins to crash, what will interest rates begin to do over the next year?
Dylan, I love your optimism. Yeah, you're like, hey, I'm very optimistic on this economy crashing.
All they do is lie to us. They're just
Crashing.
gonna lie to us.
So the Federal Reserve, Chairman of the Federal Reserve,
It's puppets.
Jerome Powell, he's the one who's responsible for the economy. And if it starts to crash, you know what he will do in order to keep it from crashing?
Buy new glasses.
He will drop the Fed funds rate real fast, to keep it from crashing, because that's his job. And that's his biggest lever. There's another lever he's got called QT and QE, quantitative tightening and quantitative easing. He's actually backing off on one of the levers called quantitative tightening. The government was buying $90 billion of bonds back, and he's like, shh, and he snores. So the Fed will reduce the interest rates to make sure the economy doesn't crash. That's what happened in COVID.
That doesn't mean speed up, man.
You're going to
No,
sleep.
I was laughing because Navy Mom Donna said Chris is timing out. It's tuning out.
He's like, oh, finance? I don't want to hear any of that shit.
Come on, no.
Interest rates, economy. I don't give a shit about.
What's
Let's talk
P. Diddy doing?
What's P. Diddy doing? He wants to know what P. Diddy's doing.
Hey, Dub, Dallas, Texas in the casa.
What's
Arriba,
up?
arriba,
Arriba, arriba. I'm doing some loans in El Paso, Texas. Yeah, a lot of that. Arriba, arriba, chingon. Wait, I don't know if I can say that, man. I'm gonna get shot.
Pendejo.
Dude.
CCG, QT gas stations.
What's the QT?
Quantitative easing.
Oh, quantity. Oh, okay, got it. Yeah.
I'm assuming. I don't know. 4 minutes left to go. CCG's keeping our time.
4 minutes. Let's go. 4 minutes. 4 minutes. Yeah, she knows, dude. How do you know?
How do you know CCG's a she?
Maybe.
Oh, because she's keeping time.
They're like, hey, 4 minutes left. They know.
Right.
You're like, hey, this is the time for.
Maybe Mom Donna back in the house. What happened in Houston? Super bad weather.
Yeah, it's super bad weather. There's like golf ball,
hurricane?
no, softball sized hail coming down there.
Ooh.
Softball sized hail.
Ooh.
Dylan Brunton says, thanks very much, sir. Not trying to be negative. Just want to make sure the family is taken care of. We appreciate you, Dylan. Take care of that family, man. That's your highest responsibility. It's not to have a Rolex. It's not to flex a Benz. It is to take care of your family. Take care of your family. Big.
And eat
very
tacos.
big. Tacos are good. Dude, I didn't think you were going to throw that in there,
Love
but
tacos.
I got to tell you, you just derailed I was all mightier than thou until you threw the tacos at
Take
me.
care of your family.
And I was like, wait, tacos? Can I take care of my family after I eat tacos?
While,
Yes, like that.
after, before.
While, after, burrito tacos. Dude.
Yeah.
Ah, dude, burrito tacos. Softball. Yeah, there's a lot of stuff going on in this. A lot of things going on. Hey, we are going to be live from Victoria Gardens next Friday. We're going to try it again. We had an amazing count on 2 or 3 of the platforms. Could not believe it. I think on TikTok we had ridiculous numbers. On YouTube we had big numbers. I was like, hey, this is strange. I think it was because of the area that we were uploading from. So we're going to give it a shot again. We booked some appointments next Friday in Victoria Gardens. We will be going live from Victoria Gardens. If you happen to be in Victoria Gardens, come by, say hi, ask us a question live. We will be there. What did she say?
She said, what happened to Houston? We already answered that.
Oh, okay, cool.
But CCG's got it, man. You know what he said? Vamonos!
Hey, CCG, vamonos. We appreciate you. We've been Chris and Lee. We'll be out.